Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we finish this week, we've seen quite a bit of volatility as the S&P traded as high as 36.45 and now has retreated back to the mid 35.50, 35.40 levels. As we close out this week, though, we're starting to see more talk about the coronavirus as the cases are increasing. New York, Chicago, California is starting some new restrictions. But the real question that I have right now is, will these restrictions have the same effect as they did earlier in the spring when we went to the first lockdown? Even if we go to a serious lockdown mode again, I don't believe that the effects will be as catastrophic as they were before. What I believe has happened is that the economy has adapted, and it's adapted pretty quickly. We've seen it through the stay-at-home trade, through the Zooms, and how everybody's working right now. It's becoming more the norm. And I believe that in itself will continue to drive market sentiment. In yesterday's action, we did see some of the fears start to flow into the markets a little bit. I did expect to see a slight down day yesterday. We did manage to trade down on the SPX down near the STX number, or the extreme support for the day. We rebounded from that, and it looks like we're going to continue to rebound as we come into Friday's close. But overall, this week has been somewhat of a climactic week from the standpoint of printing up into that 36 handle, but we're still stable and above last Friday's close. I will go through all the details here in a few minutes in the technicals and what I believe will be important on the setup for the end of this week. But yesterday we did see the claims come out. They were down 50,000 to 709,000. We also saw the continuing claims come out. They did come below that 7 million number that I talked about at 6.8 million. And my expectations are going forward that that number will continue to decline over the next several months, in spite of all of these restrictions. I don't believe we're going to see a big kick up in unemployment again. As I said a minute ago, I believe the economy has adapted substantially to this new environment. There's still plenty of industries that are destroyed. We know that there's sections of the economy that are not going to respond, and they haven't responded so far. So nothing's really going to change there as we get into all of the posturing that we're seeing across the board. Even Chairman Powell and the Federal Reserve has discussed that the pandemic is not under control yet. There's still a lot of risk, and he's just went on about this. And I know everybody wants to believe that the Federal Reserve is independent. We know it is interdependent, not independent. And it has been a team since March when this thing all started. One of the things you haven't heard a word about, or anyone even concerned about, is the S word, or the stimulus word. Nobody's talking about this. There's a little chatter in the background, but there's no focus on this. And the markets have a tendency to focus on one, maybe two significant items that it can watch at one time. My joke for a long time is the market can't chew gum and walk at the same time. It usually will focus in on one key element, and that's about it. And the markets will be driven from day to day about that. The algos have been quiet the last two sessions. They haven't even had any way to get involved. They got involved a bit today, saw some emotions over the coronavirus numbers that were coming out. We did see some selling coming in. There was definitely some machine activity that was going on today. It didn't get out of hand. Even though we pushed down to the STX number that I mentioned earlier, we are seeing some rebound overnight and some stability. As we come into the end of the week, we'll see the typical squaring of books. We'll see how they come out. Last week's close was 3509 on the SPX. If we close higher than that number, then there's a slight bias to the upside for next week. We'd have to close well under 3497 today to set any kind of negative tone. It looks like we're going to continue into some consolidation phase, and as I'll go through here in a minute, the database and other elements within my analysis continues to suggest the bias will be to the upside as we look forward, at least for the next several weeks. Let's go ahead and take a look at the charts, see what they're telling us for Friday. As we review the WaveTech database, we did see some further buying, very slight. We saw about 300 new buys on the short-term database versus 130 sells. So we had a bullish rotation. We've moved the percent bullish up to 61.53%. So we're continuing to see some traction, and this suggests that in spite of the sloppiness that we saw yesterday, there's still more trends starting to emerge on a short-term level. This is going to keep the bias to the upside, as I mentioned in the opening comments. We're not seeing any negative rotation. Now, before we get way overbought on this database, we're going to have to push into a 78 plus percentile range. When this database does get very extended, then that will suggest that a short-term rotation will start or some correction phase will happen. We're not anywhere near that at this time. Above 78%, we've seen it actually print up to 88 to 90% this year. I don't think we have the same type of momentum behind the market to get up into those high percentile ranges, but I do believe we'll get up to a typical 78 to about 82, maybe 84% bullish. That will represent some sort of top. And even though it gets there, one of the things you have to look at in the database, not at just the percent long, but the duration of the trades that it's tracking. Over on the right-hand side here right now, the typical trade is 40 days. Right now, the current duration is only 5.6. So there's still about 30 days looking forward into the database. The average profit is 11.48%, and the current profit is only 2%. When you start to look at a large database like this, these numbers start to normalize, and that 11% gain is just for a 30-day period on average on a lot of stocks, in this case over 10,000 buy signals. So these numbers all normalize, but this is actually telling us that there is a bias to the upside. Now today is Friday, so we're going to be watching the intermediate database on Friday night. We'll run our intermediate models. My expectation is, as long as we close above the 3509 level that we closed last Friday on SPX, we're likely to see some more positive rotation. We did get up to about 62%. We did get up to about 62% about 3 weeks ago. We pulled back to 54. I suspect that we'll move back toward 58 to 62% over the next couple of weeks, and this will continue to keep the bias on the intermediate level to the upside. As we begin the review of the S&P 500, the futures are up 7 handles overnight. We're seeing the momentum start to expand again. PPM1 is at a 0.80 and ticking up. PPM2 is trying to get through its first and second derivative. PPM3 is positive as well. So we're continuing to see this uptrend start to accelerate. The 10-period moving average is just below the action, right near the STX number. That 10-period moving average, 3482, STX 3478. My expectation for today is that we've already seen an S1 low, 3518 even is the low, S1 is 3519. I'm looking for at least an R2 high today. We could print up toward 3574 if there's some short covering ahead of the weekend. We'll see how this thing sets up. But if it does, as you recall, the key number on this chart to signal much higher prices is 3576. We need to close above that. Otherwise, we'd need to close above the R3 number, 3476. The RXT number is 35 35.87. The key numbers as we look at the weekly chart on the futures is going to be for a close above 3,500. Right now we're 35.39. It looks like we'll achieve that. We'll want to see a higher close. The most positive close that could happen today would be a close above R1, which is 35.47. So we're pretty close to that. That's the minimum positive close to really show momentum to uptick. But you can notice on the PPMs on the weekly, PPM 1 is turning up. PPM 2 and 3 are above their first and second derivatives, which is positive and suggests that there's likely to be some acceleration on the upside. Yesterday's extreme printed down to the STX number. The low was 35.1858, STX 35.16.66. We did see a rebound off of that level. We closed back at 37, just about back at S2. But as we look at the market grid for today, the S1 number is 35.27 and the R1 number 35.46. I expect to see at least a 35.57. There is a potential to print up to 35.67 today. And on the breakout number for the S&P cash is 35.88. Until we get a close above that, we will stay in some sort of consolidation range. I expect that we will see this thing move higher next week, but it's all about today, and we have to maintain well above that STX number today, 34.9704. A close under that level would be negative. I don't see that happening. There's only about a 30% probability for that to occur. Just as in the S&P futures, we'd need a close above 35.52 to set at least a minimum positive tone, which would be an R1 close on a weekly. A close near 3,600, an R2 number would be very bullish because we'd obviously managed to print above that 35.88 number and get a confirmation number. I don't have high expectations over that happening, but I do expect to see the markets close higher on the week. If we did trade through that 34.97 number I mentioned just a minute ago, the S1 number is 34.66. I don't see that happening, but that would be your next major support in the pattern. Next market I'll cover is the NASDAQ. NASDAQ continues to be in a sideways range, but as I've discussed, it's starting to show more strength than the S&P once again. We could start to see the leadership slip slightly back towards the tech stocks and toward the NASDAQ here over the next couple sessions. The 10-day moving average is 11,726, the low 11,804 tonight. And if we look at the market grid, 11,745 is S1. That is going to be a solid support number. If we did print down there, we're likely to see a bounce, and we should move toward the R2 number, 11,977. I talk a lot about this 11,900 number. On the NASDAQ, a close above that level is going to suggest we're going to see a lot higher prices in the pattern. The daily configuration also suggests if we get above that 11,900 level, that we're going to see a move towards the 12,534 and the 13,143. Now, I've seen comments that because of the reversal we saw on Monday, that I was talking about 13,000 numbers. Yes, I was, and I continue to talk about them. This pattern will continue to move toward these upper levels. This market has not turned down. We're seeing all the PPMs you'll see on the daily are all turning up. This is a positive configuration. As we look at the weekly NASDAQ futures, we also notice something very different. When we were looking at the S&P, we're trading near the lower end of the range for the week on the S&P. Now, the NASDAQ had a much higher volatility range, and we're trading closer to the middle. S1 is 11,888. And we're likely to move toward a R1 number today, which would print us all the way up to 12,261. Pivot point will be 11,900. We're trading 11,878, up 59 handles right now. So expect to see this market move toward this upper end of this range. Whether we can do it this week or not we will continue to see higher prices next week. Now, to get a positive close on the NASDAQ on a weekly basis, we're going to have to close above 12,075. That is not a necessary event to happen. If we did get that close, then that would be substantial, confirming that big reversal week. But it does appear, based on the RTX sell that we got on a weekly, that we always get 1 to 2 weeks of lower prices. This would be one if we just close below that 12,075 level. That could satisfy that. Then we could see a resumption to the upside next week. The final market that I'll cover tonight is gold. Gold continues to edge higher. I mentioned I expected it to get back above the 1878 level. Today, R1 is 1879. We've seen an 81 high. We should continue to move toward an R2, possibly an R3 in the pattern, and moving back toward these moving averages that I've been discussing throughout the week, which are at 1894. Now the 40 is at 1899. They are declining slightly. The PPMs are flat on a daily basis. There's no real downtrend on a short-term basis. We're really just in this consolidation, and we're likely to see this thing move back above these averages at 1899. The real story to be told here is on the weekly. As I've been talking about for the last 3 weeks, is that the 10-week moving average is down at 0.29, so it is at a trend mode on the downside. That tells us there's major resistance at the 1913 level. That number is dropping about $5 per week. That's going to put us around 1908, 1906. I've been talking about that number for the last couple days. I think a slightly higher number next week will start to turn the PPMs up, and you'll start to see some vulnerability to the upside, and we're likely to go back and print into the Fibonacci range that is on the screen here, which we could end up going back. 1905 is the 0.23 retracement, and then we could end up back at that 0.38 number. Is 1940. If you recall, we printed all the way up to the 50% level at the 1969 level, as we saw a high week before last at the 1961.8 level, almost the exact hit on that 50% level. So I believe we'll see this reverse of a reverse. We got an RXT close week before last. Now we got an RXT buy signal. We're closing below the STX. If we finish below the 1890 level today, then we're likely to move back into the grid next week, looking for it to move back to these levels I just mentioned, between 1906 to about 1912, where that is going to be the minimum target zone, with the potential of going up further into that Fibonacci retracement zone. This will complete the video. Thank you again, everyone. Have a great weekend. We'll talk to you on Sunday night.